Brian Larkin is the CEO and founder of United Oil and Gas. He joins us now to tell us the latest developments from the company. Brian, what's been happening?
Well, good afternoon, Alistair. We've had a very busy few weeks. Most recently, we've announced a license extension to our Jamaica license, which is significant development. Firstly, because it gives us security of tenure over the license. And the key point really about this extension is it's not an extension from today, it's an extension from the expiry of the current phase. So we've got 2 years on top of the current license phase, which was due to expire in January 2026. We've now added a further 2 years to that. And that's really important because we've got quite a lot of interest in the data room right now. In fact, we've got more companies in the data room now than we've ever had throughout our ownership of the license. So it's really exciting that we're making quite a lot of headway in regards to a farm out.
So yeah, so you've got the most active farm out process in company history. What kind of deal would you like to do?
I think that's the $1 million or the $1 billion question. What I'd like to do is the best deal I can possibly do for my shareholders, and that's what we're working towards. But we have to be pragmatic, and in the current environment, you need a lot of luck, and you need a lot of things to go in your favor. But what we are seeing is an alignment of industry sentiment, of interest in the project, and what we're sitting on is a colossal project in terms of international industry scale. It's potentially 7 billion barrels of recoverable volume. There's development costs of about $8 a barrel. The break even is $25 a barrel. So the economics in this project are absolutely huge and extremely favorable. So we'll be looking for the best possible deal we can get for our shareholders.
I've seen it said that this project is comparable to Exxon's Guyana Stub Roek project with 11 billion plus barrels there. Is that fair?
Yeah, it's pretty much a mirror image in many respects. It's the same source rock for a start, but all of the numbers are the exact same. The scale, the size, the economics, the development costs, the break even per barrel, the recoverable volumes, the potential size of the prize. It's a very close similarity. And in fact, it's the analog we use when describing the project to industry players because it's very, very similar. And the interesting thing is you can't get into Guyana now. The price is so high, and Namibia, but Jamaica is still available. So you can imagine we're getting a lot of interest because of the similarities between Guyana and Namibia. And if anybody has had interest or exposure to those plays, they really should watch the space with United because we have access to a project of the similar size, ilk, a magnitude as Guyana and Namibia.
Right. So, I mean, before we get into a little bit more detail, just tell us about Namibia then. You mentioned Namibia. What's the story there?
Well, it's the latest big real estate, really, and it's where there's been a lot of huge discoveries more recently. And what tends to happen is all boats rise in a high tide. So if you get a play I take a step back. There hasn't been colossal discoveries in the industry for quite a few years, and that obviously affects sentiment quite substantially across the entire industry. And what you need is you need a hit somewhere to start getting the juices flowing again, to start excitement building again, and to bring interest back to frontier exploration. And as I said, all boats rise in a high tide. So companies that have had success in those regions are now very much attractive to what we've got in Jamaica because it's so similar.
Right. So, getting back to Jamaica then, you mentioned costs a moment ago. What will it take to get into production? I've seen some costings. Tell us what they look like from your perspective.
Well, sure. I don't bamboozle anybody with too many numbers, but to get this asset into production, we're talking about $8 a barrel for development costs. In production, the asset will be break even about $25 a barrel. So even in a low oil price environment, our asset is still usually positively economic. It's usually profitable, even if oil were to slip. And I guess the headline that quite a lot of people are attracted to is the NPV value. The NPV value based on $80 a barrel is about $23 billion of NPV across the asset. Now, that's our own internal numbers, and that's based on a fairly conservative discount factor applied to our economic modeling. But certainly the economics on the field are colossal. And it's very similar again to the assets we've already mentioned in Guyana, where there's been 11 billion barrels have been discovered when production's ramped up to over 500,000 barrels a day. We can see the same type of economics and deliverables in Jamaica as what we're seeing in Guyana right now.
And what's it like working in Jamaica then? Is it a good jurisdiction to be in?
It's brilliant. It's absolutely brilliant. They're part of the Commonwealth. It's a stable fiscal regime. It's a stable government. We have ring fenced our tax arrangement with the government as well, which is part of our agreement between us and them, which is a production sharing agreement. So it's very welcoming to developing this project. In fact, not only the current government supportive, the political opposition are supportive, and we've noted quite a number of questions in Parliament about the project and in terms of when would it be developed, because the potential results of this project for Jamaica as an island, as a nation, is absolutely colossal. I mean, we're talking about Jamaica potentially having a sovereign wealth fund if this project was to be successful. Now, I caveat that if this project was successful, the economic return for the island is just mind blowing, and it's very similar to what we've seen in Guyana. So the support locally for the project is really encouraging, and that's important, and it's really important when you're trying to attract a global partner into your license, because not only have you to sell them the rocks, you've also got to sell them a new country entry, and that's really important, that there's a stable regime. And there's a sensible government in power, and there's also a sensible political opposition. So I think all the ingredients are there for this project now, and I think everything is starting to align for us to really take advantage of the project that we're sitting on and really go after the prize, which is, as I've touched upon, it's absolutely colossal.
So we've mentioned that you're talking to potential partners. I believe you've got some uh, NDAs signed there. But what's going to happen in the meantime? What sort of work are you guys getting on with, or can we see any news flow in terms of permitting or seismic, or how's that going to look?
Yeah, well, as part of our current work program commitment, we have committed to carry out what's called a piston coring survey, which is basically piston cores, samples of the seabed to check for oil presence and oil migration. Now, we haven't been able to kick that work off because we've been wrapped up in permitting and planning, and that's taken a hell of a lot longer than we would have liked. And I think at this stage, it's fair to say that that work will probably be wrapped into part of the farm out agreement that we may enter with one of those interested parties that you've mentioned. But right now, the core focus for us, and it really is and has to be our core focus, is once we've got this momentum, is to take advantage of that momentum and deliver a partner. Now, we've been here twice before, and the expression I used earlier when I was talking to my team is we were almost jilted at the altar twice. We deals agreed, we heads of terms agreed, but the positive takeaway from that, despite the deals not actually executing, was that we brought two really large companies through the data room. They've signed off technically and commercially, but for their own strategic reasons, they weren't ready to complete a deal with us. So I think now we're in a place where we've got more interest than we've ever had at any one time. In fact, we've more people under NDA today than we've ever had at any one time, and in the data room. So we've got confidence that we can get one of those over the line, particularly given that we've been here before, where two super majors have essentially signed off technically. So I keep saying all the ingredients are there. We just need a little bit of patience, and we just need to get this farm over the line, and I'm determined to make that happen.
Now, we've seen the oil price drop recently in response to some of Donald Trump's tariff policies, but on the other hand, he's espousing a philosophy in the USA of drill, baby, drill, which is perhaps encouraging to the resources sector in a sort of broad, unspecified way. Do you think that the wider macroeconomic situation is going to have any specific impact on how you guys move forward?
Without question, without question, and we're seeing the ripple effect of drill baby drill, coming into Europe as well. I understand that Trump has been putting pressure on the Keir Starmer to relax some of the tax burden on companies operating within the North Sea. So not only is he asking domestic companies to drill, baby, drill, but he's also putting pressure internationally. And bear in mind, and this is a very important point, our project is 600 miles south of the US. We're 600 miles south of Miami, our Jamaica project, where we're potentially got 7 billion barrels of recoverable volume. I was in Houston 5 or 6 weeks ago at the NAPE conference, and the sentiment with US explorers and producers has done a complete 180 in the last 12 to 18 months. And it's fair to say we have some US interest in the project right now because of that. And bear in mind, the sage pitch in Houston for us was we are 600 miles south of Miami. We're very close to the US. We've got 7 billion barrels of potential prospective resource here. So, yes, we're seeing the ripple effect and the change in sentiment. Regarding oil price, we're less worried about oil price. Over the life of a project like this, which will be 40 plus years, we'll see various oil price cycles. So we run our economic models at a conservative number. They're then discounted. We apply risk to that. So over the course of the lifetime of a project, we will see various oil price cycles. And in fact, in the 20 years I've been in the industry, I've certainly seen 3 or 4 of them. So we don't really worry too much about oil price in the longer term when you're taking a longer term view.
So finally, can we expect news on these potential partnerships anytime soon? Is it a long process, or should we be on the edges of our seats for imminent news?
Well, again, that's the second $1 million question you've asked me today. I think we should be on the edge of our seats, to be frank. I'm hopeful that we have some white smoke soon. We're doing everything we can. We've got a number of parties in the data room. They're advancing through their work. Some are a little bit more advanced than others. In saying that, I can't guarantee we'll have a deal, but what we are doing is we're working pretty hard to get it done. I believe we will get it done. We just need a bit of time and we'll get there. But it's an incredible project. We're in the best position we've been in yet with this project. There's a clear alignment now between the size of the asset, timing, market sentiment. So we're determined to deliver a cracking deal for our shareholders.
Well, we wish you all the best. Brian, thanks for talking to us today.
My pleasure.